Gavin, thanks for joining me today.
Pleasure. Good to meet you.
So at Net Zero Compare, we focus on how companies actually deal with emissions data, reporting, and sustainability decisions in practice, not theory. So we are leading Pinwheel at the time when carbon accounting, scope 3, and supplier data are becoming unavoidable for many companies, unfortunately. So I would like this conversation to stay practical. What works, what doesn't work, and what companies should realistically expect when they start dealing with emissions data at scale. Maybe to start, if you could tell us a little bit more about your background and how Pinwheel came about, because you've worked across sustainability, data, and product. So, what problem did you see in the market that led you to build Pinwheel?
Well, thank you, Carl. That's a great introduction. My background is as a chief marketing officer, actually. So I spent most of my career very focused on the customer and what the customer needs to attain from a business. When we group of sort of former colleagues, myself, a lady called Amber Rudd, who was Secretary of State for Energy and Climate Change here in the UK, chap called Rupert Howell, who used to run some of the world's biggest advertising agencies, and a couple of other colleagues, when we got together and looked at what we think of as the beyond value chain mitigation market, what companies are able to do outside of their value chain in order to have a greater environmental and climate impact, we realized that actually not much of the work is focused on customers at all. So companies get very little value from it. If you think there were sort of two customers, I suppose, in that process, there is the company who's paying the money, and there's the recipient of the money, which is effectively the planet, or should be the planet. And so when you look at those two constituent cohorts as customers and you say, is the business getting value from its beyond value chain spend? The answer quite often was no. Perhaps very narrowly in a compliance sense, but not really in a creating value within the business sense. And when you look at is the planet getting value as a customer of this work? Is the planet getting value for that spend? Then the answer is almost certainly no. And in fact, all the research points to 2/3, 3/4 of money spent or deployed in this area has very little benefit to the planet, or potentially even some sort of disbenefits to the planet as well. And so when we started Pinwheel, we were very interested in how do we balance both sides of that equation? How do we make sure that businesses who are expending their hard-earned money in this area derive some value for it back into the business, because that's super important? And how do we make sure that the money which is deployed is creating value for the purposes it's deployed within the environment? It sounds like quite a simple hypothesis, but actually, at the time, it was a pretty radical way of thinking about these beyond value chain mitigation interventions as value creators, rather than effectively compliance or tax effectively.
Got it. I was asking because many sustainability tools start, unfortunately, with good intention, but not always with a clear operational problem to solve for customers. So in your case, it was the other way.
It's the other way. But my whole life has been around being sort of customer focused and customer led, and that's what we've tried to do here at Pinwheel. And I think, actually, I know we're going to come on to this, but I think it's a really good thought organizer if you're in any part of this value chain at all, and you're sitting as a maybe a chief sustainability officer, or sustainability director in a corporate, to ask yourself, where am I adding value and who am I adding value to, will stop you just going down this route of counting things just for the sake of counting them.
And if you could explain to our audience what Pinwheel actually does in plain terms. If you had to, let's say, explain Pinwheel to a CEO or CFO, operations lead, in 2 minutes, what would you say it actually does and what it deliberately does not?
Yes. So we are focused on beyond value chain mitigation. We're focused on what a company can do outside of its direct supply chain in order to have a positive impact on the environment and have a positive impact on the business. So that typically means we help businesses create their beyond value chain mitigation strategies, both for carbon and for nature more broadly. We help organizations source and compile a portfolio of investments or projects to invest in around the world, often quite adjacent to their supply chain, and we do all of the due diligence and verification on those projects to make sure that companies are investing at the very sort of peak of high quality impact projects, rather than a lot of this low quality volume stuff that you see within the market. We then monitor that over a period of time, and we have a platform that quite comprehensively stores all of that data, and helps organizations deploy those investments in a way that adds value back into the business. That might mean integrating with customers, integrating with employees, other key stakeholder groups, to make sure that you are deriving value back into the business.
And is your platform targeted for a specific, for example, size of the company, or no matter of the size, any company globally can always get help from your company?
Yeah, we're optimized to corporates, organizations of a reasonable size. That said, we don't have a lower minimum, and we're happy to work with any company that we think of ourselves as targeting really what I call progressive and leading brands. So typically brands who are sophisticated, who want to do the right thing, who have an element of knowledge about what they're trying to achieve, and probably brands for whom on their balance sheet, their brand is worth comparatively more than their competitors. People who understand the value of brand and the value of doing this right.
And do you have any geographical limitations?
No, not at all. We're based here in the UK, but we work with businesses and projects on every corner of the globe. So truly international scope.
Perfect. Now let's talk about the real state of emissions data today. So from what you see across customers, how good or bad is emissions data quality today, especially beyond scope 1 and 2?
Well, look, I think let's just take a step back as to what it is that you're doing with the data, because how good the data is depends on what its purpose is. And I think that, a lot of businesses get quite tied up in trying to chase perfection of the data, where they don't need to, and where perfection doesn't exist. And so, if you are a physical goods company, and you are trying to pinpoint specifically where in your supply chain, particularly perhaps in scope 3, your emissions are, then clearly, pinning that down accurately is super important, because that's going to have a material effect on your emissions and your ability to meet net zero. If you are a professional services business, then I would argue that you have to be really clear on, why am I collecting this data and what am I going to do with it? So I had a business who came to us the other day. They had spent more than £6,000, British pounds, in working out that their carbon responsibility was about £500 worth of quite good quality carbon, right? And so, you've got to ask yourself in that instance, is it worth chasing really good quality data if if the output of that is likely to be very, very low, and is going to have an insignificant impact on either your own decisions within your supply chain, or what you're going to invest in beyond your supply chain? And look, the reality is that, if you ask 4 consultants the same question on emissions data, you will get 4 different answers. Now, that's not necessarily a problem if you're using that data directionally, in order to pinpoint areas in which you may be able to make impact and change. Where it becomes more of a problem, or where it's become a problem within the beyond value chain side of the industry that we work in, is when you are taking imperfect data and you are using that data to make an absolute claim off the back of it. I think a lot of businesses have said, we know exactly to the ton, to the fraction of a ton, how much carbon we are emitting through our scope 1, 2, and 3. And we know exactly how many metric tons of carbon is being sequestered on the other end of the process, so we can make a carbon neutral claim. And that is for the birds. To think that that the data can ever be that accurate is laughable.
That was a very interesting clarification because, from our experience, it's a little bit different. When we talk to companies that feel pressure to report, they're always stressing out about their data, whether it's maybe too messy or incomplete. I understand that at the end of the day, it's not the main blocker for companies, at least in your case, right?
No, look, exactly, and I think you have to. The most important thing I think is to be super clear on what you are going to use the data for, and that will give you a sense of exactly where it is that you need to look, and the quality of data that you need to pursue. It's like any, if you're losing weight and you use some scales, it doesn't necessarily matter how accurate the scales are, as long as you're using the same scales every time and you can track your progress, right? So if you are using it directionally and you're using it to, and you're using it consistently, I would say is more important than chasing absolute perfection for most businesses. Some businesses, do need to chase a higher level of certainty and perfection, and that's entirely legitimate. But not for everybody. And we see people getting very, very sort of wound up over the quality of the data, and that becomes an obstacle to doing anything. And that's where I think there's a real problem. If it sort of causes analysis paralysis, and you say, well, I don't know, the data's such a mess, so we won't do anything for years until we work out how to get perfect data. And I think that's a missed opportunity.
Got it. A perfect example with the weight loss. I think it will put a clear picture for our audience. Thank you for that. Now let's talk about scope 3. So when companies attempt scope 3 for the first time, where do they typically get stuck? Suppliers, methodologies, internal alignment, or in maybe something else in your view?
I think in our view, it is scope 3 by definition is reasonably outside of your control, and so you are relying on multiple third party data sets in order to build that picture. The 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 challenge therefore with scope 3 is aligning, I think, multiple parties who may be using multiple data sets to the to that same objective, and that's where scope 3 causes quite a lot of obstacles, I think, in the process.
We always say that this is the area, scope 3, where expectations and reality often collide, if not always.
Yeah, so who was it? Mike Tyson said everybody's got a plan until they get punched in the face, right? And I think that's the same with scope 3 data. You have a perfect plan until it meets the reality of getting the data back from your supply chain, and that's where it becomes patchy.
Exactly. And how should companies think about the balance between real primary data and estimates? At one point, does good enough actually become acceptable in your view?
Well, again, I would say it comes back to what you are going to use the data for specifically. So, the fact is that most of this estimates and models are going to be used within most of this data. And that might be entirely legitimate, but not if you're going to make an absolute claim off the back of it. So if we take Red Plus, for example, the forest protection market that has become so controversial within carbon offsetting, you know, there are always going to be models involved in understanding or seeking to understand, is a forest at risk of destruction, um, and if so, how can you mitigate that risk of destruction? How can you protect that forest? And then, therefore, how much carbon is sequestered as a result? All of that is based on models. Can't be based on anything else. And it might be entirely legitimate. In fact, there's probably no other way to come up with that data than to base it on assumptions and models. So in and of itself, not a problem. And some of those projects can be, super valuable, and maybe something that as a business, it's entirely legitimate to invest in those projects. The problem comes when you use those credits, let's say that you buy from a Red Plus project, to make an absolute claim. So you say that you are carbon neutral because you have then, goes back to my point, you've then asserted that you know exactly how many metric tons of carbon are protected or avoided, I suppose, in that sense, in that project. So you are making an absolute claim off the back of assumption model based data. And that's where the problem arises. So again, I would say it's about understanding what claim are you trying to make, what goal are you trying to pursue. If you are, there may be enormous social benefits, communicate benefits, nature, habitat, biodiversity benefits of doing this project. The assumption data for those may be entirely legitimate in order to make those decisions, but you can't base absolute claims off the back of it. If you are going to make an absolute, absolute claim in terms of carbon, then you better be sure that, in most cases, the carbon that you are saying has been sequestered is sequestered and secure for 1,000 years plus, because we know that's how long carbon stays within the atmosphere. So it is horses for courses with this data and these models. I don't think that assumptions are bad. I think that assumptions which are presented as absolutes are bad. And that's where the industry tends to go. And I think that's where clients, as a result, tend to want to look for absolutes. And, once you sort of become, at peace with the idea that absolutes very rarely exist in this world, then that's quite liberating, and it can help you take a step back and place your investments in a much more sensible, strategic way when you're no longer sort of pursuing that sense of absoluteness in the data.
So I understand if you start talking to your clients, if you're starting the collaboration, probably the first phase is always to determine the purpose of the data, determine the purpose of reporting, right?
Yeah, what are you seeking to achieve? And for who?
Exactly.
What are you gonna do with the data? And I think a lot of people start with a sense of, you know, we must count the carbon, and we must be as accurate as possible in the counting of the carbon, and then we must offset all of that carbon. Um, and they come up against a wall where either they realize that, their data sets are incomplete or based on assumptions, and that feels risky, or they come up against a wall where the data sets and assumptions of the projects they want to invest in are incomplete, and that feels risky as well. And so at that stage, they either sort of, put their head in the sand and just go, oh, I'm sure it's all right, and we'll make an absolute claim against it, risky, or they go, I can't do this, too difficult. It's too difficult. Let's not do it at all. And that's also risky. And so actually there is a pragmatism at the center of this, which is worth holding on to.
Got it. And now let's talk about regulation and reporting. So, how are the new reporting requirements like CSRD, which is Corporate Sustainability Reporting Directive, and related frameworks changing the way companies approach carbon data and tooling today?
So there are two groups of companies, I suppose, perhaps three groups, but two main groups of companies, certainly in the ones that we deal with. There are people who are directly subject to those regulations, and there are people who fall in the supply chain of people who are directly subject to those regulations. And so what we're finding is those regulations are increasingly, creating a business as usual culture where there is an expectation of being able to report, and there's an expectation of being able to demonstrate action in these areas, even if you are not directly subject to those regulations. And so we find this, even as a reasonably small business ourselves, we find this frequently when we are pitching for work and when we're undergoing procurement processes, that we are asked for, increasing amounts of data ourselves, even though we're not directly subject to the regulation. And so I think what these regulations are doing is creating an environment whereby businesses are finding it quite difficult to ignore the requirement, or people or businesses are finding it quite difficult just to almost stay under the radar, as it were. So they are creating a broader culture, even if that is indirect. I think so just to say then, add on top of that, that layer of voluntary codes like the Science Based Targets Initiative, their BVC, Beyond Value Chain Mitigation, or ongoing emissions responsibility codes. This is even within those voluntary codes, we're going to find that reporting and standards start start to tighten, and people, signing up to things like SBTI are growing every year still. And so we don't see any sort of big reversal away from these codes and these regulations. In fact, we see the opposite. We see corporates getting increasingly sophisticated in working within these regulations and codes and wanting to adopt these best practices.
Uh, at the beginning of the conversation, you mentioned that you focus on large enterprises, corporations, but as we know, the biggest pool of potential customers and clients are mid-sized companies. So, for mid-sized companies, is it realistic to build internal emission data systems, or does it almost always make more sense to work with external platforms like yours?
Well, we don't help organizations measure their data specifically. We work with the outputs of that data. So our role is in taking a brief from a client who perhaps have already worked out their emissions data, and helping them understand what they can invest in order to to mitigate, respond to that. Or indeed to work out whether they need to, create those data sets themselves or not, or whether there are other mechanisms, perhaps, money for money as opposed to money for ton, and certainly as opposed to ton for ton, that may be sufficient. But to answer your question, there are, I think, where you can create your own internal data based on your specific requirements, that will almost always be better. And certainly, I would say you may be able to do that more cost effectively than using external platforms, and certainly more cost effectively than using external consultants. But I would go back again to my sort of theme, which is before you expend any resources on doing that, you've got to sit down and ask yourselves, why are we doing this? Why do we think it's important to capture this data? And what are we going to do with the data once we've got it? And if you can't answer the question, what are we going to do with this data once we've got it? Don't start creating it until you can answer that question. Otherwise, you're just going to find yourself with the world's biggest spreadsheet and no idea how to deploy that information.
I understand that still there will be some use cases when it's actually better for companies to build their internal emissions data systems, even for mid-sized companies. That's actually interesting because I always thought that going to external partners should be the cost-effective way for such companies.
Yeah, and look, we are not experts on the creation of that data, but my sense is that you can expend quite a lot of money quite quickly with consultants and external platforms in answering a question that you either don't necessarily need to answer, or one that is relatively simple for you to answer yourself. And this certainly, I think over the next few years of AI, I think we will find that as these data sets are socialized, and become more public, and as AI becomes more sophisticated in the tracking and analysis, I think that the creation of those data sets will be cheaper over time. The question will be, what do you do with the data? And that's where you need, to be very thoughtful. That's where you need good quality advice, and that's where you need to be quite strategic in how you deploy any funding or decisions against that data in order to have a proper impact.
And what's the purpose of reporting, as we already mentioned a few times?
What is the purpose of reporting? Exactly. And who are you reporting to, and what are they seeking from you? What do they need? Again, it goes back to understanding customer, right? What does my stakeholder group look like? What do they need from me? What do I need to provide in order to add value throughout my value chain? And if I can be clear on that and I can answer those questions, then I'm going to get a lot of the way there in writing that brief for the data set that I need.
Now, I would like to talk about common misconceptions about carbon accounting tools. So, if you could tell us what's one assumption companies often have about carbon accounting or sustainability software that you think is simply wrong.
Yeah, I mean, I guess sort of covered it. I think it's the assumption that you can count extraordinarily accurately a carbon emissions, and you can then, you know, uh, count very, very accurately the carbon that is sequestered or avoided in a beyond value chain mitigation offsetting portfolio, I think is wrong. There's so much nuance between those two points that is often overlooked. The reality is that actually, if you take this as directional on both sides and you compile a really good quality portfolio is really important. So, you are investing in multiple projects, not just one, potentially to have multiple, outcomes and objectives. Then you can get a long way towards adding really good value and lowering your risk. But thinking that you can count and then simply buy a load of credits in order to mitigate that output is a mistake.
And I think some companies tend to also wait until they will have the perfect data, which unfortunately we know will never happen. You cannot have like perfect, pristine data down the road.
Yeah, absolutely. Yeah, exactly. And it's. I'm trying to think of a good analogy for it. On my, I used weight loss earlier, didn't I? It's.
Yes.
There's an excuse, right? There's always an excuse to not do something which feels risky or feels difficult. And we see so many businesses who for whom data is a reason to do nothing.
Hmm.
Um,
Exactly.
and whenever you're asked by stakeholders, what are you doing in response to climate and biodiversity breakdown? You say, well, what we're doing is counting, and it's the you know it's the deck chairs on the Titanic. You're steaming towards the iceberg, and you're obsessed with counting the deck chairs on the deck and put them into color and pattern order. When really what you should be doing is trying to avoid the iceberg. And I would say if in your corporate strategy you are not convinced about what you are doing, which is avoiding the iceberg now, then you really need to think about that before you get very, very engrossed in the counting of the deck chairs.
To avoid a disaster down the road.
Exactly right.
And from your perspective, what does a well run emissions reporting setup actually look like after, let's say, 1 year or 12, 18 months?
Yeah, so I think it looks like, having a really good, clear governance and ownership within the organization and those roles clearly defined. By the way, that doesn't necessarily mean one person sitting in the center who's responsible for it. It means business, functional heads being responsible for their own areas of responsibility uh, uh, regarding sustainability. A good understanding of climate and biodiversity impacts at a granularity which is appropriate for the size of organization and the sophistication of the organization that you're in. A clear, ideally costed transition plan for within your value chain, and some progress against that. I think within the first year and or 18 months, and a budget for ongoing emissions responsibility or beyond value chain mitigation, agreed and deployed. And I think there's 5 things there. I think if you're in a position after 12, 18 months of being able to tick those 5 things, you're in reasonably good shape and you have a basis upon which you can build in the future.
And again, I think not perfection, not a perfect system, but something that genuinely supports decision making.
Yeah, and get it and get on with it. I think the just putting a toe in the water, and starting to make some progress and not letting perfection be the enemy of any progress at all or any movement at all, um, is really, really important, because you will learn as you go. And as long as you're clear about the obstacles and the limitations of your strategy, and you communicate those clearly, then just getting on and making progress, it's easier than you think. And you will find that the details that come to you through that process will be very useful in being able to shape and hone that process over time.
And now, maybe a piece of advice for companies just starting out. So, for companies that are only now taking emissions reporting seriously, what's the one thing they should focus on first? And if you could tell us one thing they should avoid.
Well, to avoid doing nothing for a start, avoid just sort of that analysis paralysis on the data. So do something. I think you can start with a proxy. You could start with money for money, for example. You could set, which is quite often a reasonable proxy for emissions. You could say, look, there's going to be a period of time that it takes us to get this data in place. The thing that we know now is how much money we are making. So we are going to put a percentage of our profits or percentage of our turnover. We're going to deploy that against ongoing emissions reduction or ongoing emissions responsibility, rather, or beyond value chain mitigation. And we're going to get on and do that now. And we're going to start creating a portfolio of good quality carbon and nature projects that we're going to start investing in now. And then over time, as that data improves, maybe we switched from a money for money model to a money for ton model, and hone that process over time. But I would start with a reasonable proxy and just get on and do something.
Thank you very much for those insights. And before we wrap up, is there anything important we didn't touch on that you think would be valuable or important for our audience?
I would say just don't forget your brand and your business and your business drivers. What you stand for, what you want to be known for, your values, your customers, your staff. These are all important inputs in your beyond value chain strategy, or your ongoing emissions responsibility strategy, and they're really, really undervalued by businesses as being important input data. It's not just about the ones and zeros of the counting. It's about, what are we trying to achieve? How do we tell a story? How do we bring this to life? How do we create a narrative around it? How do we do something which chimes with our employees, which chimes with our customers, which chimes with our stakeholders? So this becomes a process which adds value to the business, which adds value to the brand, rather than a tax on the business. Nobody ever did their best work with a compliance mindset. So think about this as an opportunity. Think about this as a value driver. Think about this as a brand driver. And if you deploy with that mindset, with integrity at the forefront of your strategy, then you're not going to go far wrong.
Very well said. I totally agree. Gavin, thanks for the clear and grounded conversation.
My pleasure.
And for everyone listening or watching, we'll include links to Pinwheel and related resources alongside the episode of Net Zero Compare. And as always, we focus on helping companies understand what actually works without the hype.